Now we are going to discuss the amendments in exemptions and charge segment 7 onwards. So here in this exemptions and charge, pretty good amendments are there for May 22 exam, because we have this something called as circulars. Through circulars they have expanded the meaning or scope of the exemptions, plus at the same time various notifications were given in order to extend exemptions to some other activities also. In that we are going to discuss circulars on exemptions first. So I will be giving you the background of this and then I will explain so that you will be able to understand. So any service provided by an educational institution to its students, faculty and staff is exempted. And what is the meaning of educational institution? So any service provided by an educational institution to its students, faculty and staff is exempted. Okay. And what is the meaning of educational institution? We have three categories of educational institution. Category 1, educational institution up to 12th standard or equivalent. And the number 2 is educational institution providing education for obtaining a qualification recognized by law for the time being in force in India. Then category 3 educational institution is approved occasional education. Okay. Now, services provided to educational institution. So number 1, catering, then security and housekeeping, transportation to category 1 institution is only exempted, whereas admission to and conduct of examination of all three categories exempted, supply of online periodicals and journals to category 2 institution is exempted. Only to category 2 institution is exempted. This is the services provided by any person to educational institution, Now here Anganvadi schools. What are these Anganvadi schools? These Anganvadi schools are to provide daycare to the kids, which are established by the government. Okay. So these Anganvadi schools will be receiving funds from the government as well as from the corporates as donations for the purpose of providing food to the kids who are there in the daycare. Now, so they will not cook the food, but they will outsource it to some other contractor. So they will provide catering service to Anganvadi schools. So there are some outdoor caterers who will provide catering service to Anganvadi schools and they will be receiving some money from Anganvadi schools, which are nothing but government funded or corporate donations. Now in this background, whether the catering service provided to Anganvadi school is taxable or exempted. First we need to understand, is Anganvadi school coming in category 1 education institution? If Anganvadi school comes in category 1 education institution, then the catering service provided to category 1 education institution is exempted. So yes, Anganvadi schools will come into category 1 education institution because the first point, that is the first category in education institution, is preschool education and education up to higher secondary or equivalent, which means it includes even daycare, pre-KG, everything, play school. So Anganvadi schools are part of category 1 education institution. So catering service provided to Anganvadi school is exempted. So whatever may be the funding out of that, that can be government fund or that can be corporate donations, but the service provided to that Anganvadi school is exempted. So this is that first circular. Okay. Then, so whether serving of food in schools under midday meal schemes would be exempt if such supplies are funded by government grants or corporate donations, and whether GST applicable on supply of food in Anganwadis and schools. So we need to understand, first we need to write that Anganvadi schools will provide daycare facilities which are part of educational institutions under preschool education and education up to higher secondary or equivalent. They are coming under preschools, and catering services provided to educational institution, category 1 education institution is exempted, because of which it is exempted. Like that you need to write as the answer. Then question number 2, whether GST is applicable on annuities paid for construction of road where certain portion of the consideration is received upfront while remaining payment is made through deferred payment spread over years. So here we need to understand the background. Toll charges, if you take toll charges collected by the builders who lay down the road from the vehicles which are plying on that particular road is exempted. Okay. So under BOT contract of government, what is this BOT contract of government? Build, operate, transfer contract. What will happen is that first government will give the land to the builders. This builder will lay down the road and they will be keeping a toll gate, and on the vehicles which are plying on the road they will be collecting toll charges. The toll charges collected is nothing but recovery of their investment which is exempted. And that toll charges can be collected by way of annuity also. That annuity means over years rather than collecting it every trip. So over years, yearly they will be collecting, that is also exempted. Toll charges collected by way of annuities is also exempted. Now the question came here that government is approaching a person, say L&T, to lay down a road. Rather than collecting the toll charges from the people, they are asking L&T to collect the consideration from the government in installments like annuities. So whether the exemption is available with respect to money collected from the government with respect to laying down of road. So by way of annuity when they are collecting, will the exemption be available? For that the exemption is not given, because the clarification says that sir, only when the toll charges is collected by way of annuity the exemption is available, but not when the consideration is collected in installments. So the exemption which was available to annuities is only for the toll charges, not for the consideration collected by way of installments. Okay. So the said exemption notification exempts service by way of access to road or bridge on payment of toll. And another entry says that 23A, entry number 23A says that, so by way of annuity, toll charges by way of annuity, but that exemption is not applicable in this case. So in this case, what they are collecting is the consideration by way of annuity, so that will be taxable. Then next question is related to examination boards, National Board of Examination. So for example, these examination boards will conduct NEET exam and JEE exam, because of which once a student qualifies that exam, based on the score that he got, he will be getting seat in the educational institution. So now this NEET exam is conducted by this National Board of Examination, and for which they will collect some exam fee. Exam fees will be collected. Whether the exam fees collected by the National Board of Examination is exempted, because we have one exemption, that is services provided by educational institution by way of conducting entrance examination is exempted. Like that one point is there. So therefore that entrance exam fee collected by educational institution for conducting entrance exam is exempted. Under that point, whether this National Board of Examination collecting fees for conducting this NEET exam will be exempted. For that, if that National Board of Examination becomes an educational institution, it is exempted. What is an educational institution? Up to 12th standard or providing education for obtaining a qualification. But where National Board of Examination is providing education as a part of curriculum for obtaining qualification, no, na. That's why this clarification has been given, stating that National Board of Examination or any examination board under government will be treated as educational institution for the limited purpose of conducting the exam, and whatever money that they are collecting for conducting the exam as entrance exam fees will be exempted. Okay, this National Board of Examinations or any other examination board under government will be treated as education institution, so the exam fee collected will be exempted. However, any other service provided by them will not be exempted, that will be taxable. Okay. Then next, so another one, this is related to composite supply by way of milling of wheat into wheat flour along with fortification. That is, we have one point, any activity which the government has to do as per Article 243G or Article 243W of the Constitution. Government or government authority or government entity is required to do certain activities as per Article 243G or 243W of the Constitution. Now, they are not doing that activities, they are outsourcing that activities to some other person. Now, when they are outsourcing that activities to some other person, that person, if he provides pure services, exempted, or if he provides a composite supply of goods and service, for example, sanitization of streets, service is sanitization and chemical supplied is goods element. So, exempted provided the value of goods does not exceed 25% of the total value. So, in that exemption is applicable in case of wheat flour. So, conversion of wheat into wheat flour and fortification thereof, will the exemption be available? So, no, the exemption is not available because the fortification is the service element, whereas crushing of wheat into wheat flour and that wheat flour will be coming under goods element. So, therefore, it will not be coming under less than 25%. The goods element is more than 25% of the total value. Due to that reason, the exemption is not available in this case. So, this circular is related to that. Then, whether GST is applicable on supply of service by state government to their undertakings or PSUs by way of guaranteeing the loans. So, this is one of the specific exemption with respect to services provided by government to business entities. Guarantee commission collected by the government for guaranteeing the loans taken by PSU. PSU is taking a loan that is guaranteed by the government. So, when government guarantees the loan taken by PSU, so from bank PSU will take a loan, that guarantee is given by government for which PSU will pay some commission. So, that commission is exempted, let that be central government or state government, that is exempted. So, this exemption was already there, just a clarification has been given, it is reiterating that let it be central government or state government, the exemption is available. Then, apart from these clarifications to the existing exemptions, we have some new set of exemptions added and then changes to the existing exemptions also by way of notifications. First, in income tax, we have section 12AB also added as a trust. We have some exemptions with respect to charitable trust like public health, advancement of religion, spirituality, yoga, and then educational program to homeless children, orphans or prisoners or mentally physically traumatized persons or persons over 65 years residing in rural area or wildlife protection. So, we have exemption even old age homes where the amount does not exceed 25 rupees per month. So, like that some exemptions are available to section 12AA trust. Now, wherever that section 12AA trust comes, so 12AB trust is also added there, that is this first one. Then FIFA Under 17 Women's World Cup 2020 was supposed to be held in India in 2020, but because of the pandemic it was not held. So, it was deferred and it is deferred to 2022. In 2022, whenever it is held, the entry ticket will be exempted irrespective of the ticket price. Irrespective of the ticket price, the entry ticket is exempted. Then AFC Women's Asia Cup. So, AFC Women's Asia Cup 2022, for that also irrespective of the ticket price, the entry ticket will be exempted. Then transportation of goods by vessel or aircraft from India to outside India was exempted up to 30/9/2021, but now that exemption has been extended to 30/9/2022. So, transportation of goods by vessel or aircraft India to outside India is exempted, whereas aircraft outside India to India will be taxable or exempted, and vessel from outside India to India will alone be taxable. So, that is this point. Then exemption granted to services of leasing of assets by Indian Railway Finance Corporation to Indian Railways. Indian Railways Finance Corporation will be leasing of assets to Indian Railways. So, that was previously exemption and now that exemption has been withdrawn. Then it will become taxable. Then national permit. So in one of the specific exemptions by services provided by government to business entities, so national permit or any permit charges collected by the state government or central government for granting the access to the vehicles to travel between the states, that permit charges collected will be exempted. Okay, previously it was taxable, so this is a newly added exemption. Then exemption available to services provided by government. This is services provided to government. So there is a coaching center which is conducting some training program, or any person conducting a training program. So services provided to government, wherein entire expenditure for the training program borne by government was only exempted. But now that has been reduced to 75%. So if 75% or more of the expenditure is borne by government, then the entire training program is exempted. Okay. Exemption available to services provided to government under any training program for which total expenditure is borne by government is now available if 75% or more of the total expenditure is borne by government. Okay. Then these are the changes to the existing exemptions or additions. Then some clarifications on exemptions related to the rate, but actually this is not required. This is not required. Okay. So because rate related changes we are not required to remember, but I am just telling you here that services provided by way of cooking and supply of food by cloud kitchens or central kitchens are treated as restaurant service. For that reason we will remember. So cloud kitchens are treated like restaurant service. For restaurant service, is there any exemption? No. So therefore for cloud kitchens also the same treatment, 5% rate. What you need to remember is cloud kitchens are treated like restaurant service only. Then services provided by any institutions or NGOs under the central scheme of scholarship for students with disabilities. So providing scholarship for the students with disabilities, where total expenditure is borne by government, is only exempted, not 75% or more. That is for normal training program, but with respect to scholarship for students with disabilities, entire expenditure should be borne by government. So what is this cloud kitchens? Cloud kitchens are like, so these kitchens, they will cook the food. There won't be any restaurant wherein you will eat the food. So these people will just make the food and they will be supplying to various restaurants or various people through Swiggy, Zomato, etc. They are basically called as cloud kitchens, wherein restaurant facility will not be there. But then also they will be treated like restaurants. That is that. Then third point, satellite launch services. Previously satellite launch service were taxable, but now it is exempted. Either ISRO or Antrix Corporation or New Space India Limited. So services provided by them are exempted. Okay. Then, but even then when it is exempted, but export of exempted service will be qualifying for zero rated supply. So what will be taken as the place of supply in case of satellite launch services? In case of satellite launch services, the place of supply will be taken as the location of recipient. Okay. So location of recipient will be taken as the place of supply, and accordingly, so whatever service, that will be treated as export of service. But it is exempted now, sir, exempted only. But the day when exempted service is exported, it will qualify for zero rated supply and we can claim the refund. Okay. Then overloading charges in the toll plazas. In toll plazas, they will be levying overloading charges along with the toll charges. So like how toll charges is exempted, overloading charges collected in toll plazas is also exempted. Then, so giving on hire to state road transport undertaking is there now. So we have one point, giving on hire to state road transport undertaking a motor vehicle that can carry more than 12 passengers. So what is the meaning of giving on hire? Giving on hire, which means, so whatever vehicles that are given on rent, okay, so whether it may be rental based on routes or based on timings, etc., whatever it may be, so effective control of the state transport undertakings or local authority should be there. So then only it will be called as giving on hire. Okay. So these are the various exemptions related changes. Okay. So this you need to quickly go through it once, because MCQ at least for 2 marks it can be tested, or somewhere in a regular question involving computation they can give us 1 or 2 points out of this. Then segment 9, registration. In registration chapter we have one amendment mainly, that is Aadhaar authentication is not required in few cases. So what are those cases where Aadhaar authentication is not required? So individual who is not a citizen of India, or members of HUF other than Karta, then partners other than managing or authorized partners, or any member other than authorized signatory, or central government, state government, local authority, then public sector undertaking, statutory body, UIN holder. These 9 people are not required to undergo authentication. Actually, if a person is already registered, before the date of this notification related to other authentication, they also should undergo authentication. But if they are covered under these 9 categories, they are not required to undergo authentication even if they have already registered. That is that point. Then that's a simple point, so which I gave in the summary itself, but I have just discussed it now. Then next one is, so for revocation of cancellation of registration, whenever there is a cancellation of registration, so that is cancellation order is passed by the proper officer, either based on application made by the registered person and suo motu initiated by the proper officer, but there is a cancellation order given by the proper officer. Now within 30 days from the date of cancellation order, we can make an application for revocation of cancellation. That 30 days has been extended for a further period of 30 days by additional or joint commissioner, and further 30 days by commissioner. So we crossed 30 days and it is within 60 days from the date of cancellation of order. We can definitely make an application for revocation of cancellation. But in the portal, that functionality is not enabled. So what is that the person has to do? For that a clarification has been given. So you crossed 30 days, but the period is within 60 days. So what you need to do is that you need to make a request through letter or email for extension of the time limit, and then the proper officer shall forward to the jurisdictional officer. Then the proper officer shall forward the request to additional or joint commissioner for decision on the request for extension of time limit. So to your jurisdictional officer, every person will know who is their jurisdictional AC, DC or superintendent. So to the jurisdictional proper officer, we will be sending a mail or request. So they will be forwarding it and getting the approval. Then suppose if the joint commissioner or additional commissioner so is satisfied that they can accept because of the sufficient grounds for delay, then in that case, so they will allow the person to file the application beyond that time. Otherwise, now they will reject. Okay, they will reject. And suppose if that 60 days is over, now further 30 days also there. Now it will go to commissioner. Same procedure, but only thing commissioner will take the decision. Commissioner will take the decision. And whenever this functionality is enabled in GST portal, this circular is cease to have effect. So therefore, till the time that functionality is enabled, that extension of time limit functionality is enabled in portal, so we need to send it mail or letter. Thereafter it will be forwarded and they will take the decision. So this is one clarification related to that SOP for implementation of the provision of extension of time limit. So it so happens that every time the lawmaker will make some change that will not be reflected in portal. Because it is not reflected in portal, they give a circular. So for a stopgap arrangement, then the portal they will rectify, then this circular will be withdrawn. This is a routine work which they are doing from the beginning. Then next one, so there is a circular given in continuation to this, that is the 30 days plus 30 days plus 30 days. for that point. Actually, this change came recently, that 30 days plus 30 days, continuation of delay. Application for revocation of cancellation of registration has not been filed by the taxpayer, not at all filed. So then they can file by the extended timelines as provided. Okay. Now, application for revocation has already been filed and which is pending with the proper officer. So then proper officer will process the application. Okay. So by within the extended time limits, considering the extended timelines. Application for revocation we made, but rejected by the proper officer. Why rejected by the proper officer? Because it is not within the time. Initially 30 days was there. So rejected by the proper officer. Now a fresh application for revocation you have to file. A fresh application for revocation you have to file. Okay. Then application for revocation was filed. Proper officer rejected, and on that you went for an appeal. Now, appellate authority shall take cognizance of the said notification, because already the notification has been there. So, shall take the cognizance of that notification for extension of time limits while deciding the appeal. So, they will ask the officer to accept the application. Who? Appellate authority. Application for revocation was filed. Proper officer rejected the application and appeal has been decided against the taxpayer. Now, can the taxpayer make a fresh application because a notification came for extension? Yes. Taxpayer may file a fresh application, but within that time limits. Because initially 30 days, now 90 days they gave. Because of that reason, as a transition, this clarification has been provided. Okay. Then, next one, whenever we make an application for cancellation of registration, what is the time limit within which the proper officer should cancel the registration? So actually there is no time limit specified under the law. So for which they gave a department instruction that within 30 days from the date of application for cancellation, they need to cancel the registration. So this 30 days has been given as an instruction to the department personnel to follow that. Okay. So that is the amendment. So these are the amendments related to registration chapter. Then payment process. In payments, only one amendment related to section 50, that is, whenever there is a delay in payment, delay in filing GSTR 3B. So this is a little bit important point, so you need to understand it carefully. That is, there is a delay in filing 3B. Now, when there is a delay in filing 3B, so we need to pay interest on the gross liability or the net liability. We need to pay interest on the net liability only. Okay. For example, July 2020, GSTR 3B. GSTR 3B gross liability is 40 lakhs and input tax credit paid through ledger, paid through electronic credit ledger 30 lakhs. Paid through electronic cash ledger is 10 lakhs. Okay. Now the July 2020 GSTR 3B filed on somewhere 30/11/2020. What is the due date? What is the due date for July 2020? The due date is 28/2020, but it is filed on GSTR 3B filed on 30/11/2020. So now there is a delay. For this delay, we need to pay late fee as well as interest. Okay. First we will see interest. So what is the number of days delay from the first date after due date? What is the first date after due date? For August 11 days, September 30 days, October 31 days, November 30 days. So delay 1 or 2 days. For the delay of 1 or 2 days, we need to pay interest under section 50. This interest under section 50 is on what? Is it on 40 lakhs or 10 lakhs? It is on 10 lakhs because had you filed on time, you would have paid how much? 10 lakhs only. So 10 lakhs into 18% into So 102 divided by 365 will be taken as the interest. So 10 lakhs into 18% into 102 divided by 365. So that is 50,301 rupees will be taken. Okay. 10 lakhs into 18% into 102 divided by 365. So 50,301 will be taken as the interest in this case. And late fee is also payable. Late fee. And the late fee under section, late fee is payable under section 40. So late fee under section 47. Late fee payable under section 47. So what is that late fee that will be payable? So the late fee will be, now the late fee has been changed. Now the late fee has been changed. GSTR 1 or GSTR 3B, GSTR 3B. Is it nil return? Definitely not nil return, other than nil return. So 25 rupees per day. 25 rupees per day into 102 days. How much? So 102 into 25. So 2,550. Subject to maximum. Subject to maximum. How much? Subject to maximum how much? We have three maximum limits. Subject to maximum 1000 or 2500 or 5000. When it is 1000, when it is 2500, when it is 5000. When the aggregate turnover during previous year, okay, exceeds 5 crores, okay, then it will be 5000. When the aggregate turnover during previous year exceeds 1.5 crores, then 2500. Does not exceed 1.5 crores, then it will be 1000. So this is the maximum. So it depends upon the previous year. So this is under each act. So this is under each act of CGST and SGST. Under each act of CGST and SGST, suppose if the aggregate turnover during previous year does not exceed 5 crores, then it will be 2500 only, not 2550. Only 2500 is payable. Suppose if the aggregate turnover during the previous year exceeds 5 crores, then it will be 2550 because maximum is 5000. So like that, depending upon that, the late fee is payable. And this interest under section 50 on net liability is based on Finance Act 2021, but it is a retrospective amendment. So which means the effect is with effect from 1/7/2017. So that is given in Finance Act 2021 that it is a retrospective amendment with effect from 1/7/2017, which means whether this person who already paid interest on gross liability, will they get refund because they paid excess? Yes, they can claim for refund under excess payment. Any amount that is excess paid, they can claim the refund. Okay. So, but this is the provision that is applicable. Okay. Next, suppose if there is one liability, one invoice, which is not shown in July, that is GSTR 3B of July 2020, but it is reported in GSTR 3B of some other month. Okay. So now see this point, that is July 2020, there is an invoice. Okay. Invoice reported in September 2020 and paid through GSTR 3B. How much? That is rupees 1 lakh gross and this amount of 1 lakh through electronic credit ledger we paid 80,000, through electronic cash ledger we paid 20,000. Okay, again I am repeating. So July 2020 one liability is there. That liability of July 2020, that invoice not reported in 3B of July 2020 but reported in 3B of September 2020, and that amount partly paid through credit ledger, partly paid through cash ledger. Okay. Now whether interest is required to be paid, of course interest is required to be paid. What is that interest in this case? Interest is payable on 20,000 or 1 lakh. Is this delay in filing GST or 3B? No. So therefore 1 lakh into 18% into, what is the delay? So it should be reported in July 2020, means the due date is 20th August. 20th August, so 11 days in August. Then September 2020 you will file by 20th October. So September 30 days, October 20 days. So for 61 days we will be paying interest on the total amount. So 1 lakh into 18% into 61 divided by 365. So 3008 rupees. 3008 rupees will be taken as interest. So because if you see the provision, provided that interest on tax payable in respect of supplies made during a tax period and declared in the return, this 1 lakh liability is not declared in the return, okay. So only when it is declared in the return for the set period furnished after the due date in accordance with the provisions of section 39, okay, except where such return is furnished after commencement of any proceedings, shall be levied on that portion of the tax that is paid by debiting the electronic cash ledger. So only 10 lakhs here, but here it is not reported at all. Then in that case, so we need to pay on the entire amount, even though partly paid through credit ledger and partly paid through cash ledger. So that is with respect to this payment process. Okay. Then next, returns under GST. In this returns under GST, annual return. So this annual return, for quite a long time there was a confusion whether we need to file annual return or not required to file annual return. So this we need to understand now for 3 financial years. First annual return we will see, then audit we will see. First annual return for 3 financial years, 1918, 1819 and 1920. So if your aggregate turnover during those financial years does not exceed 2 crores, no need to file annual return. If you want to file optionalities, you can file. But if the aggregate turnover exceeds 2 crores, then you need to file annual return for these 3 financial years. Okay. So even for 1920 also. From 2021 onwards, annual return is required to be filed by every registered person. Who are not required to file annual return? Tonic. T for TDS TCS deductor, O for OIDR supplier, N for non-resident taxable person. So TDS deductor only, not TCS deductor. TDS deductor, OIDR supplier, non-resident taxable person, then input service distributor, casual taxable person. They are not required to file annual return. But otherwise every person is required to file annual return. Okay. Then what about audit? See, the audit is now not applicable. The audit is omitted. So these are the rules related to that. Okay. Furnishing of annual return by those registered person whose aggregate turnover does not exceed 2 crores. So this is the updated notification, and in that they gave for these financial years 17, 18, 18, 19, 19, 20 and even for 2021. So but who is that? Person paying tax under section 10. So who is person paying tax under section 10? Composition scheme dealer is not required. Okay. And after the due date of furnishing of annual return, the common portal shall not permit filing of 9A for the set period. This is for composition scheme dealer. Then for a normal person, For which financial year? Only 3, 17, 18, that is 17, 18, 18, 19, 19, 20. Now they extended for 20, 21 also optional if the aggregate turnover does not exceed 2 crores. Already it was up to 19, 20. Now they extended for one more year, 20, 21 also. Okay. And 21, 22 not yet given. 21, 22 not yet given. Up to 20, 21 we need to know. So therefore, registered person up to 2 crores annual return has been made optional. So up to the current financial year. What is the current financial year? 2021 for your exam. Okay. Then aggregate turnover exceed 2 crores but up to 5 crores. They need to file annual return. What about audit? Not required. Audit not required. Aggregate turnover exceeds 5 crores. Audit required. But that audit also now omitted from which financial year? The audit is now omitted from the financial year 2021 onwards. Okay. With effect from 2037-2021. So omitted by section 110 of Finance Act. So therefore statutory audit is not there now. We don't have statutory audit for the financial year 2021 and onwards. So this is the updated provision from 2021 onwards. So up to 2 crores, that is for financial year 2021. 21-22 they did not give anything, so due to that reason. So annual return not required. Annual return exceeds 2 crores, annual return required, but no need of any self-certified reconciliation statement. When it exceeds 5 crores, annual return is also required and self-certified reconciliation statement is also required. Okay. Now previously we had 3 types of audits. Now in that one audit has been omitted, that is statutory audit is omitted under 35 subsection 5. We have only 2 audits, that is departmental audit and special audit. Departmental audit is conducted by the officer, special audit is conducted by CRCMA nominated by the commissioner. And when the audit is conducted, departmental audit, when they want to, like whenever they want to conduct, they can conduct, there is no frequency and all. Whereas special audit, during scrutiny or investigation, the officer is of the opinion that the valuation or input tax credit is not proper, then they will be ordering for special audit. What is the time period? Departmental audit 3 months plus 6 months, whereas special audit 90 days plus 90 days. Then audit report, very important, special audit report will not be submitted to the registered person, special audit report will be given only to the officer. Expenses, both cases will be borne by department. Scope of audit, departmental audit, they will audit all books of accounts and records, but special audit is only related to valuation and input tax credit. Notice, a 15 working days prior notice will be given where in case of departmental audit, whereas special audit will be like a surprise, only direction to get the audit will be given by the officer to the CRCMA. And what if audit is already completed under any other law? Audit under this section is mandatory. Okay. So suppose if audit, already department audit is there, can the special audit also be ordered? Yes. Special audit also be ordered. Then refund under GST. So in this refund under GST, we have few points here. Previously, there was no facility to withdraw the refund application. So previously, once the refund application has been filed, that is filed, it cannot be withdrawn. But now they are giving the facility for withdrawal of the refund application. What is that? Suppose if the application is filed by mistake, I will tell you the problem. When the application is filed by mistake, based on that, they are processing the refund, and now for the same year, say we forgot to claim refund. For the same month, we forgot to add few invoices to claim the refund. We claimed with some invoices. Now for the same month, again we cannot file a refund claim. That problem is there. That's the reason why they brought this amendment. That is, at any time after filing refund claim, till the time of issuance of acknowledgement or deficiency memo, but before the issuance of any order or show cause notice, withdraw the refund claim. If the claim is filed by mistake or under wrong category or wrong details or any other reason, we need to specify, so we can withdraw. But ensure that they are not giving any acknowledgement or deficiency memo, or they are not giving any order, passing any refund order or show cause notice, we can withdraw. Okay. Then what is the form for withdrawal? Form GST RFD 1W. Application is 1, withdrawal is 1W. Any amount debited, suppose whenever you make an application for refund from the electronic credit ledger, refund of unutilized ITC, our electronic credit ledger will be debited. Now whenever you file the refund withdrawal form, any amount debited from the applicant credit ledger or cash ledger shall be credited back. Okay, shall be credited back. That is this withdrawal of refund application. Then what is the time limit within which refund claim can be filed? Actually, there is a time limit of 2 years. Within 2 years from the relevant date, we can make an application for refund. And that relevant date depends upon various situations. Suppose if it is export of goods, the date when goods cross the territorial waters, from that date within 2 years. And suppose if it is export of services, the date on which we receive the foreign exchange proceeds, or the date of invoice, whichever is later. Like that, we have different time limits from the date within 2 years. Actually, we filed a refund application exactly 1 year 11 months. We filed refund application 1 year 11 months from the relevant date. And they gave a deficiency memo. They gave a deficiency memo the next day stating that there is some discrepancy. Okay. So now we will rectify it and we will file so that the time limit of 2 years is adhered. No issue. Now we filed the refund application exactly 1 year 10 months. Okay. Now they gave deficiency memo after 2 months. And thereafter we rectified the deficiency, we rectified that and we filed the revised application. But now it goes beyond 2 years. Even then it is okay, it is filed within 2 years, because the time period from which we are filing the first application till the time we get the deficiency memo will be excluded. So after 2 months they get deficiency memo, the 2 months will be excluded, which means the application is filed on time. That is this. Any person claiming refund of any tax, interest, if any, paid on such tax, shall make an application before the expiry of 2 years from the relevant date. The time period between the filing of refund claim and the issuance of deficiency memo, which is around 3 to 4 weeks, will not be included to calculate the period of limitation of 2 years. Okay. Then next, refund on account of wrong classification. What is this refund on account of wrong classification? Treating intrastate supply, we paid the GST, CGST, SGST, but actually it is interstate supply. So we need to pay IGST. What does section 77 says? First pay the correct tax. What is that correct tax? IGST. And then get the refund of wrong tax. What is that? CGST, SGST. Okay. So that is what section 77 says. Previously that functionality was not enabled in the portal. Now they have enabled that functionality in the portal and they gave the rules also in this regard. What is that? So we need to file the refund application in RFD 1 through the common portal, and that should be before expiry of 2 years from the date of payment of tax. Now the question arises, the 2 years will be counted from the date of payment of wrong tax or correct tax. First we paid CGST, SGST. Then we are paying IGST and getting refund of CGST, SGST. Now the 2 years should be counted from the date of payment of wrong tax or correct tax. It is a correct tax. Whenever you paid the correct tax, from there within 2 years, you need to make the refund claim. Okay. So for that reason only they gave a circular. What is the meaning of the term subsequently held? How you know that it is a wrong? Either on your own motion or based on the information from the officer. Okay. Either subsequently found by the taxpayer himself, or so made by the taxpayer is subsequently found or held as interstate by the officer in any proceeding. Either by the taxpayer or by the officer in any proceeding. What is the relevant date for claiming refund? So 2 years, the date of payment of tax under the correct head. Okay. So that is this. So this illustration is based on that. And suppose if the adjustment is already done through credit note, refund under section 77 would not be available where the taxpayer has made tax adjustment through issue of credit note under section 34. Suppose already we gave a credit note and through that credit note we made adjustment and we paid. So then in that case, so there is no refund that is available because already we have done that through credit note. Then next point is whenever exports is subject to customs duty, whenever export of goods is subject to customs duty, then you will not get refund of unutilized ITC. You need to go for refund upon payment of IGST. There are two options. So number one, pay IGST and get refund of that IGST paid, or number two, export goods without payment of IGST under bond or LUT. Now under option 2, there is a disqualification. If the export is subject to customs duty, you will not get refund of unutilized ITC, like that one point is there. But that case, when the goods are dutiable, dutiable means what? What if the goods are nil rated and exempted? Even then it is called as dutiable under customs. Even when it is nil rated or exempted under customs, it is called as dutiable. Then also the same situation, no. For that only they gave a clarification. Whenever we need to pay some export duty on such goods, then only we will not get refund of unutilized ITC. Only those goods which are actually subject to export duty, that is on which export duty has to be paid at the time of export, will be covered under the restriction for availment of refund of ITC. Goods which are not subject to any export duty, may be nil rated or fully exempted, will not get covered by this said restriction. Okay. Then, so amendments in provisions relating to order sanctioning refund. That is, whenever the refund is sanctioned by the officer, if there is any outstanding demand against that person, so this refund can be withheld by the proper officer. For that, there is a small change in the provision, what they are telling, where the proper officer is of the opinion that amount of refund is liable to be withheld. Then they will pass an order in part A of RFD informing him the reasons for withhold. And provided where the proper officer is satisfied that the refund is no longer liable to be withheld, he will pass an order for release of the refund in part B of RFD 7. So this is a simple procedure that they have made. Previously, they just made some complicated procedure in refund order, all these things. Now, part A, part B of RFD 7, like that they brought. RFD 7 part A, why am I withholding the refund? Now, no need to withhold the refund, release part B, simple. So these are the various amendments related to refunds. Then next, miscellaneous provisions. In miscellaneous provisions, blocking of e-way bill. Blocking of e-way bill. Whenever a person, a registered person, has not filed returns for 2 consecutive periods, what return? If he is under normal scheme, GSTR 1 or GSTR 3B. If he is under composition scheme, CMP 8, not filed for 2 consecutive tax periods. So that particular GSTIN which has not filed the returns will be blocked from generation of e-way bill. But they gave a relaxation that GSTIN is blocked from generation of e-way bill only on outward supplies as a supplier. But as a recipient, they can generate e-way bill, or as a transporter, they can generate e-way bill. The restriction is only as a supplier, they cannot generate e-way bill. Okay. So that is this. In respect of any outward movement of goods of a registered person. Previously, if you are under supplier category, recipient category or transporter category, not possible. But now they made a change. In respect of any outward movement, means as a supplier GSTIN, you cannot generate e-way bill. As a recipient GSTIN or a transporter, you can generate the e-way bill. So that is this particular change. Okay. So with this, all the amendments that we have on GST is completed. Then in customs, types of customs duties you can see, there is countervailing duty on subsidized articles. So we have anti-subsidy duty. In this anti-subsidy duty and anti-dumping duty, they have added few points, okay, so that we are going to discuss. First, there is one subsection 1A, circumvention of anti-subsidy duty. What is circumvention of anti-subsidy duty? You are trying to escape from anti-subsidy duty. When anti-subsidy duty will be levied? Whenever you are importing an article from a country and that country has given some subsidy to that article. You are importing an article from a country and that country has given subsidy on that particular article. So because of which it is imported at a lesser price, then it will harm the domestic market. Due to that reason, an anti-subsidy duty will be levied. Okay. Now, what will happen? So whenever they give a notification for levy of anti-subsidy duty, to escape or to avoid from that anti-subsidy duty, you will change the country of origin. Actually, if goods imported from China attracts anti-subsidy duty, you are changing the country of origin to Japan or Malaysia or Singapore, like that you are changing the country of origin. Okay, you are changing the country of origin. Or, okay, you are trying to change the description of the article. If that article attracts anti-subsidy duty, you are trying to change the HSN. You are trying to change, altering the description or name of the article. Or if you are importing that article that attracts, so rather than importing in the same form, you are importing in unassembled or disassembled condition. Or in any other manner, you are escaping from payment of anti-subsidy duty. Then that notification which levies the anti-subsidy duty for that article is also extended for the article which you are imported by changing the description, or the article you are importing in unassembled or disassembled, or the article which you are importing from another country of origin, even though that notification is not for that country, but then also it is extended as per 9(1)(a). So it may extend the countervailing duty to such other article also from such date not earlier than the initiation of inquiry as the government may by notification specify. So they can extend it to other articles also. Other articles means which are imported in disassembled or assembled or imported from some other country of origin, like that. Then next, section 9(1)(b), that is absorption of anti-subsidy duty. First one what we saw is circumvention. Second is absorption of anti-subsidy duty. For example, China has given some subsidy. If you are a manufacturer of toy exporting it to India, you will be given a subsidy in the manufacturing cost, because of which they will be dumping to India at a lesser rate. Now what Indian government will do? In order to increase the price of this article, they will be adding some anti-subsidy duty. Now whatever anti-subsidy duty they have added, so now the price became a fair price. Now again the country, China, is giving some more subsidy. Previously we did not have any provision in that case. So what they are telling is that now whatever is the absorption, to what extent here anti-subsidy duty is levied, to absorb this anti-subsidy duty, if they try to reduce the price by giving additional subsidy, then again this duty can be increased. That notification levying anti-subsidy duty can be enhanced, unless such subsidy is given on account of some other reason, maybe on account of increase in the sale price or demand, supply, some other reason. Okay. For the purpose of subsection, absorption of countervailing duty has said to have taken place if there is a decrease in export price of an article without any commensurate change in the resale price of India of such article imported, or under other circumstances, then there will be absorption. Now what will happen here? Our government will increase the anti-subsidy duty already levied. Okay. So it may modify such duty to counter the effect of such absorption. It may modify such duty to counter the effect of such absorption. Then third point, third amendment is related to EOU and SEZ, which was there for safeguard duty. Now they extended it to anti-subsidy duty. There is an article that attracts anti-subsidy duty. If that article you are importing into 100% EOU or SEZ, then in that case, that article do not attract any anti-subsidy duty. However, when you try to clear those goods from EOU or SEZ to DTA, then that article will attract anti-subsidy duty. Okay, that is this. So, notwithstanding anything contained in subsection 1 or 2, the duty imposed shall not apply to article imported by 100% EOU or SEZ unless it is specifically made applicable, or such article is cleared as such or used in the manufacture of any goods and then cleared into DTA. So then anti-subsidy duty will be applicable on those articles. Okay. Now these three changes, first change is related to circumvention, second is absorption, third is exemption, EOU, SEZ. These 3 points are equally applicable for anti-dumping duty. So circumvention of anti-dumping duty, absorption of anti-dumping duty, that exemption available to EOU, SEZ, etc. is applicable for anti-dumping duty also. Whatever these 3 points that we have discussed is equally applicable for anti-dumping duty also. Okay. Then one more change, that is, what is the time period for levy of anti-subsidy duty? 5 years, and it can be extended for a further period of 5 years at a time, which means that there is no time limit, there is an unlimited time for extension or levy of anti-subsidy duty. Previously, before this amendment, 5 years over, they did not give any notification for extension. Now anti-subsidy duty is over, again they need to give a new notification for levy of anti-subsidy duty. But now what they are telling is that if they have not given any notification before expiry of 5 years, then automatic extension for 1 year, they need to complete the review and they need to give the notification or they will drop. But there is an automatic extension for 1 year. The countervailing duty imposed under this section, unless revoked earlier, ceased to have effect on the expiry of 5 years, provided if the government in a review is of the opinion that cessation of duty is likely to lead to continue or recurrence of subsidization, they can extend it for a further period up to 5 years, and such further period will commence from the date of order of extension. Where the review is initiated before expiry of the aforesaid period, has not come to a conclusion before the expiry, the countervailing duty may continue to remain in force for a period of 1 year. So review should have already been started. Then it will continue for a period of 1 more year. Okay. So this 1 year is an automatic extension. This amendment of 1 year automatic extension is also there for anti-dumping duty. So these are the 4 changes which are common for anti-subsidy duty as well as anti-dumping duty. Okay, because both are having more or less the same provisions due to that reason. Then, so have a look into the other amendments in procedures under customs. In procedures under customs, so new regulations have been added, but these new regulations are not given in the study material, but even then and even not given in the amendments material also, but it is advisable to just read it once. So that is electronic duty credit regulations under section 51A and 51B, we have the concept of electronic cash ledger and electronic duty credit ledger. So for that purpose, they have just given some regulations here. First, issuance of duty credit in the scroll, that is whenever a shipping bill or bill of export is presented under section 50 and having a claim of duty credit under the scheme. So what is the duty credit? We have, this whenever we export, some benefit we will be getting, duty drawback. So the duty drawback will not be given as a cash refund. The duty drawback will be credited into the electronic duty credit ledger, which will be utilized for payment of liability. Okay. So when we will get duty drawback upon export, we will get duty drawback. So that amount will be now given into this particular duty credit ledger. So which is having a claim of duty credit shall be processed in the customs automated system. The claim shall be allowed by the customs as per the conditions and restrictions after filing export manifest or export report. Once the claim is allowed, a scroll for duty credit will be generated by the proper officer in customs automated system, and separate scrolls will be generated for each scheme, maybe duty drawback, or we have something like ACIS or RODTEP scheme, like that. The scroll details, including details of shipping bill or bill of export or duty credit allowed and date of generation of scroll, shall be visible in the customs automated system to the exporter who is recipient of such duty credit. So then once the duty credit is ascertained, creation of e-scrip in the ledger. The exporter shall have the option to combine duty credits under a particular scheme allowed to him in one or more shipping bills, and to carry forward the said duty credits to create a e-scrip. One e-scrip will be created. Okay. And what is the time limit within which creation of e-scrip? Within 1 year from the date of generation of scroll in the customs automated system. That each script will have a unique identification number, and what we can do with that script. So this script will be used for the purpose of payment of customs duty in the first schedule to customs tariff act. Means which customs duty? Basic customs duty. So this e-scrip amount can be used for payment of basic customs duty, and it will be valid for a period. So 1 year is the time limit for generation of e-scrip, and that 1 year validity is of the e-scrip. Okay, e-scrip validity is also for a period of 1 year from the date of generation. Now suppose if I have balance, what I can do with respect to that script? I can transfer it to any other person, who in turn can use that script for the payment of customs duty. Okay. Then suppose if any provisions of the Customs Act are contravened, then that duty credit e-script will be cancelled. So these are the points that we have related to electronic duty credit regulations. Then Customs Common Electronic Portal. So we call this ICE gate. So previously ICE gate was only for the purpose of filing bill of entry and shipping bills. Now all department communications are through that ICE gate only, which is now called as a Customs Common Portal, like how GST Common Portal. The objective is that customs law will be made in parallel with GST law. Over a span of time, they want to bring these two into together. Customs law and GST law, they wanted to merge into one goods and services tax. So for that reason only they are making these steps accordingly. Okay. Then bill of entry. So there are some amendments in bill of entry. Previously the bill of entry can be filed within 2 working days, and then they brought it down to 1 working day from the date of arrival. Now even not date of arrival, before the date of arrival they changed it. So before the date of arrival, the bill of entry needs to be submitted. And what will happen if the bill of entry is not submitted before the date of arrival? There is a late fee that is payable. What is that late fee that is payable? So you can see here, if the delay is up to 3 days, the late fee will be 5,000 rupees per day. If the delay is beyond 3 days, the late fee will be 10,000 rupees per day. Should the date of arrival also be counted? Yes, the date of arrival also should be counted. So date of arrival plus whatever is the number of days delay. So for suppose if it is 5 days delay, For 3 days, it is 15,000. Remaining 2 days, it is 20,000. So 35,000 will be the late fee. But this late fee is subject to maximum customs duty payable on such goods in the bill of entry. If it is exempted goods, subject to maximum 50,000 rupees. Okay. And if the proper officer is satisfied with the reasons for delay, he may waive off those charges. Okay. So this is the late fee. So can we file the bill of entry then well in advance, like 6 months before and all? No. So within 30 days prior to the expected date of arrival only we can file a bill of entry. Within 30 days prior to the expected date of arrival only we can file the bill of entry. Okay. So latest by before the date of arrival. Latest before the date of arrival. But little bit prior also we can file, but within 30 days prior. Now say we filed a prior bill of entry. The vehicle or aircraft or vessel did not arrive. So what is the validity of the prior bill of entry? 30 days. Then what we need to do? Again we need to file a fresh bill of entry. Again we need to file a fresh bill of entry. Because of this, will there be any delay in filing bill of entry? Yes, of course. For which the late fee gets attracted. Okay. Now I filed a bill of entry prior. But grant of entry inwards or arrival is later. Now whichever is later is only relevant for determination of rate of duty. Now in bill of entry I reported 12%, but on the grant of entry inwards or arrival the rate is somewhere 15%. Now what will be the applicable rate of customs duty? 15%. Then what should I do? I need to amend the bill of entry. Whatever prior bill of entry that is filed before the date of arrival, if there is any changes, I need to amend that bill of entry. So that is with respect to this, bill of entry provisions. And other points related to bill of entries are same. That is, there are 3 bill of entry for home consumption, warehousing, ex-bond bill of entry, etc. Now look into this question. CFA Logistics is a CHA service provider and it has many reputed clients. Zebronics Limited, a manufacturer of electronic gadgets, is importing various raw material to manufacture said gadgets. They have approached CFA Logistics to clear their consignment immediately upon arrival of vessel. CFA Logistics, upon interaction with the shipping agent, has come to conclusion that the expected date of arrival of vessel is 25/3/2021. Now, what is the time limit within which CFA Logistics should file a prior BOE? So the prior BOE should be filed within 30 days prior to the expected date of arrival, that is by 24 February. So 24 February, because 25 days in March and 5 days in February. 24, 25, 26, 27, 28, 5 days in February. What is the procedure for filing such prior bill of entry? So now there is no such request to be made. So there is no procedure. So bill of entry will be normally filed. Okay. So normally it can be filed. This point is not there. Normal filing. Previously a request was required. Now it is normal filing of prior bill of entry. There is no need of any request to be made. Whether CFA Logistics is correct in filing prior BOE on 5/3/2021. 5/3/2021 within 30 days prior, yes. If the actual date of arrival is 1/4, whether BOE filed is sufficient. When they file prior BOE 5/3 and when the vessel came 1/4, yes, it is within 30 days. No need to file any fresh BOE. If the actual date of arrival of the vessel is 8/4, whether prior BOE filed is sufficient? No, because 5/3 we filed. It should have arrived by 4/4, but it came on 8/4. So we need to file a fresh bill of entry in this case, and the fresh bill of entry is only considered as the bill of entry date. Then MRF Limited imported goods by air and the aircraft arrived in Chennai airport on 14th August. Arrival communication has been made by airlines to customs house agent of importer on the same date, but CHA did not check the mail and has filed BOE for home consumption on 19th August. Before the date of arrival means by 13th August itself it should be filed. So 14, 15, 16, 17, 18, 19, 6 days. So there is a delay for 6 days. First 3 days 15,000, next 3 days 30,000. So the late fee is 40,000. There is a delay by 6 days. Sir, holiday na 15th August, all these holidays and all should not be considered. Because before the date of arrival, what if before the date of arrival is a public holiday or a Sunday? Let it be, you need to file. So now there is nothing like that called holidays and all for filing bill of entry. Then section 99B, which talks about verification of identity and compliance thereof. So actually this provisions related to electronic duty credit regulations is not in ICSM, not in ICI study material. Same way, so this particular section 99B, they just added, but just a brief information is given, that is Aadhaar authentication. We have Aadhaar authentication for registration in GST. Same way, Aadhaar authentication is required. So in cases where a person is to be verified, okay, is to be verified, so for the purpose of granting import export code or any other case, that is, so for the purpose of granting import export code or compliance of the provisions, etc., so the proper officer can verify the identity of the person by asking him to undergo Aadhaar authentication or any other KYC. Okay. So then, notwithstanding anything contained in the provisions where the principal commissioner of customs or commissioner come to the conclusion that person referred has failed to comply, then he may suspend clearance of import or export goods, suspend the sanction of refund, suspend the sanction of duty drawback, and suspend the exemption from payment of duty, or suspend the license to operate a warehouse or any benefit under customs law. Okay. So that is this Aadhaar authentication. Then segment 26, exemptions under customs. One simple point only, that is, whenever goods are exported for repairs, we will be required to pay customs duty on the fair value of repairs and freight and insurance both ways. So we need to pay customs duty on fair value of repairs plus freight and insurance both ways if the goods are sent abroad for repairs and it is imported, re-imported. Now, whether IGST also is payable, customs duty is payable on fair value of repairs, then how IGST is payable? IGST is payable by taking this fair value of repairs plus freight and insurance both ways as assessable value and the proportionate basic customs duty and social welfare surcharge on that only IGST payable. So this is one provision. Actually we will follow this only, but as a clarification they just gave this. For example, a machine was originally imported from Japan at 250 lakhs. 250 lakhs is the value of that machine. On payment of all duties of customs, the machine was exported to supplier for repairs in December 2020 and re-imported without any remanufacturing or reprocessing after repairs. Since the machine was under warranty, the repairs carried out free of cost. But even then, fair value of repairs is how much? Fair value of repairs is 9 lakhs. Freight and insurance both ways 3 lakhs. So 9 plus 3, so 12 lakhs should be taken as the assessable value for customs. Even for IGST also 12 lakhs only we need to take. On the 12 lakhs, 10% basic customs duty and customs duty 10% social welfare surcharge. But for IGST, we need to take 12 lakhs only, not 250 lakhs. So 12 lakhs only should be taken for computation of IGST assessable value plus basic customs duty, social welfare surcharge, on that only IGST computed. Then assessment and audit. Assessment and audit, faceless assessment provisions are not given in study material. Just a small brief is provided as to what is faceless assessment. Like in income tax, faceless assessment group, like that. So what is the process of faceless assessment? Not given in customs, but it is there in customs. So these are some changes, but you can ignore this. You can ignore this because the faceless assessment details are not given. Just what is faceless assessment? An introduction to faceless assessment is only given. That's why you can ignore these changes. Then foreign trade policy. In foreign trade policy, there is only one amendment, but that is like omission of MEIS and replacement of RODTEP scheme. So what is this RODTEP? Rebate of taxes duties on exported product is known as RODTEP. So what is it they are telling in RODTEP? There are some goods for which there will be some local levies, like in Karnataka Mandi tax, and then some octroi, municipal taxes. So like lot of local taxes could be there on those goods which are not covered under any incentive. GST customs is covered under the incentive, but the local levies are not covered under the incentives. And whenever these goods are exported, whatever is the local levies that is paid to local authority or state government or central government needs to be refunded to that person. For that purpose, they created this RODTEP scheme. So this is same for rebate. So what is that? Whenever a person is having some burden of local taxes, okay. So RODTEP refers to rebate of duties and taxes on exported goods. Rebate of duties and taxes. Rebate of duties and taxes on exported goods, on export product, that is the full form for RODTEP. Okay, rebate of duties and tax on export product, that is whenever we are exporting some goods that attract some taxes and duties which are not covered under any other incentive. So to give the refund of the taxes and duties, they created this scheme. Now claim for rebate shall be made in shipping bill or bill of export, and that goods should have been covered under let export order, and such goods will be cross verified by the customs in the shipping bill or bill of export, in export manifest, departure manifest or export report. That is, whenever the goods are taken outside India, is it really taken outside India or not, will be cross verified with the export manifest, departure manifest or export report, which will be filed by the customs, filed by the person in charge with the customs officer. Goods and rates of rebate are notified under FTP 2015-22, and the rate shall be computed on FOB value of goods exported or 1.5 times the market price of the said goods, whichever is lower. So that percentage will be computed on what? That percentage will be computed on FOB value of goods exported or 1.5 times the value of local supplies, whichever is lower. Somewhere we discussed this, that is zero rated supplies. What is the meaning of zero rated turnover? For claiming refund of unutilized ATC, there this point will come. Where a person contravenes any provisions of the act or any law for the time being in force, then this duty credit or e-scrip will be cancelled. And where e-scrip is so cancelled, the duty credit amount shall be deemed never have been allowed. And the proper officer may suspend the operation of the said scrip, okay, so during pendency of inquiry and recovery of any amount of duty credit. So suppose if that person should not get the credit but he got the refund, then that will be recovered along with interest, okay. So that is this. Then also we need to bring the proceeds within the time permitted under FEMA. If you are not bringing the proceeds within the time permitted under FEMA, then also the duty credit amount along with interest within 15 days of the expiry period. What is the period allowed under FEMA? So the period allowed under FEMA is 9 months from the date of export, okay, 9 months from the date of export. So we need to realize the proceeds, okay, as per FEMA. So otherwise, on expiry of the said period, it will be recovered along with interest. Suppose if RBI has given any extension period, 6 months is given by RBI. So within that time, if it is realized, then whatever is the duty credit, so that can be claimed back, okay. Then how the duty credit will be done? So we need to log in into the portal. There are total 5 steps involved. First we need to enter our account number. So every person will be having an account number. So then RODTEP, from which location they are exporting, and what is the shipping bill for which they are claiming, that needs to be selected, and click on generation of script, and the script will be generated successfully. What we can do with that script? So now So we need to select that account number, scheme, script utilized. In that script utilized, so automatically the amount will come. So for which bill of entry you are adjusting, for that you can use the script for payment of basic customs duty. Then transfer of script, say I want to transfer the script, again same way, account number, scheme, script, amount will come, then OTP verification. Thereafter, how much amount I need to transfer, to which person I need to transfer. So transfer from and script number, once we click on approve, the amount will be transferred to that person. Okay, so that is how we will be getting. So RODTEP scheme benefit will come into electronic duty credit ledger. That's the reason why I have discussed electronic duty credit regulations, how that e-script will be generated, etc. With this, all the amendments in FTP, customs, GST got over. So thanks for your patience here.